How to grow your small bankroll to making millions. There's a lot of videos out there that say that you can't make millions with a small bankroll because you'll go bust before then. Yes, that is true also. But if you have the right mentality, the right discipline, the right review of your previous trade, if you constantly review your trades and reduce your net loss, then anything can be possible. So this trade sheet I created, this is what I do day to day. And this little project I started a couple of days ago is I'm starting with a account balance of $500, and eventually I'm going to try to make $1 million by September 2020. Of course, this trade sheet does not account for my down days because it is just a forecast of 60% return. Well, before we get in, I'll show you that part of the spreadsheet. I'm just going to show you what I do day to day. And this first trade sheet is where I import my trade results, and it dissects all the performance of these trades here. So if we go, these are just so my average risk-reward ratio is 1.18 from all this data here. And my expectancy is 0.14, which is quite low. You should try to aim for 0.3 usually. And my dollar value is $2.18 per trade. So every dollar I spend, and of course you can see my average dollar value results, which is $24.62. My average loss is about $15, which is good. You should keep that loss average lower than your win average. And then we have a net win of $680 for all these trades, and the net loss of $574. Profit $105. So out of these 62 trades, I've lost 35 of them, and I've won 27. So usually, shouldn't that mean you should lose more? Yeah, definitely not, because I cut my losses short and let my profits ride. So this gives me an overview of how I'm performing, and if I reduce this net loss $574, then of course my profits will go up. So this sheet here is where I review how can I reduce this net loss, where I can just go down to dissect each individual trade, and see, I traded the New Zealand Japanese yen and I lost $41 in, say, 2 hours. And I wonder why. What did I do wrong here? Did I misread a market condition? Was I emotionally compromised or whatnot? So therefore, you can just go back to the date and the time and just look at the charts from your broker's charts or trading view or whatever you use, and then just pretty much reevaluate why I entered this trade, why did I think it was a short, etc. And then you can slowly dissect, and how can I prevent this from happening again? Because this adds up really. 40, another loss there, 40. If I do not make that trade, I'll be up a considerable amount. So this data is pretty much imported from a CSV file where your broker provides. The broker will provide a CSV file to export all your trade results. And all I do is just import it here, and then I extract that data for what data I want. So import data C2 for the name of the trade, which is here, the name of the trade, the size, open rate you bought or sold, what date you open, close rate, open, what date and time you closed, your profits, and so forth. So this is pretty good to have to actually review and evaluate yourself every day. And I also keep a lifetime result. So this is the bigger. So the bigger the data sample, the more accurate these are going to be, because it's over 200 averages that compared to just 50 averages or whatever. So once I import data here, I just copy and paste this thing, and then it's pretty much a duplicate of this, but I like to keep a lifetime data because it's just like looking at the daily chart compared to the 1 minute chart. And I just copy and paste it here, and then I'll give you my lifetime results. And I'm still up 200 profit, net loss 700, net win 900, or 1,000, close to 1,000. And you can see out of 89 trades, I lost 54 of 135. So that's pretty much saying to me I've cut my losses short and let my profits rise. So moving back to this target forecast. So a trader is technically a business in oneself. So you are your business. You are the business. So my background is professional background is I'm an accountant, and I work with multi-million-dollar businesses, and they all have budgets and forecasts and targets, goals, financial goals specifically. And when they set these goals, it's quite magical how they get pretty close to their number. So I had this client, one of my clients, this multi-million-dollar company, and they did not have any forecasted budgets or anything to review their financial performance at all. And so I built a budget and forecast for them, and the next following month, they were just on point. They were just making their targets, meeting their targets, and just making lots and lots of money. And it's the same for a trader. If you do not have your targets, then what do you know what to strive for, when to cash out your money? So this is spreadsheet here is pretty much so if I have a starting balance of $500, my monthly, to get a 60% return of $300, I'll need to risk $10 per trade at 2%, and my dollar pip value will be 50 cents. And to achieve my $300 monthly goal, I will need 600 pips for the whole month. But that seems quite a lot. But if you break it down further, it's 150 pips a week. That doesn't seem much at all, which is just 30 pips a day. And of course, if you don't trade per day every day, then of course if you trade 3 times a week, then your pip per day value will increase to 50. If you only trade 2 times a week, then of course the pip value is 75, which seems reasonable as well. So 30 pips a day at 50 cents, that's $15 a day. That's really reasonable to do. Of course, this sheet does not account for the down days. So in January 2022, I'm not going to make $2 billion because that's far-fetched. That's unreasonable because this does not account for your down days. So this helps me keep on track of my targets. But say if you didn't, I usually create a copy of it. Say I didn't in April, I started with $500, and in May I did not reach my $300 target, and let's say I was down $100. So from that $500, I was down $100. Therefore, in May I'm starting with an equity of $400. Therefore, your monthly goal is $240, and your risk per trade is $8, and your dollar per pip is 40 cents, and so forth. And that pretty much is what $13 per day to meet, and then so forth. You can just keep adjusting from your target. So this previous would be a locked-in budget target forecast, whereas you make a copy of it, you can just create a actual. So what is your actual results? And you can even break it down to a helicopter view, where you can actually see what are your down days. So these are just random data samples. I just input it to show you guys what this calendar sheet does. So I started last night, Friday. This is real data here, and on the 12th, actually won $100 profit. But my target was only $15. These black days I did not trade those days because I only started this project last night, and I am up for pretty much the whole week. which is good to meet my $265 target. And say if you're down 50 that day, up, oops, sorry about that, and I was up $20 that day, down $15 that day, let's just say I was down again $15 that day, and that week's progress, I was down $60 from my weekly target of $75. So therefore, you can re-dissect it again. At the end of the month or end of the week, you could just go, hey, I've been down 3 days. Why? You can go back to your trade sheet and find out why. 12, I was down. I was down $26. Here's why I was down. Here's the big one, $113. I was down $113. Why? Then you go back to the date and time, go to the charts, review yourself, review your emotions, review what was I thinking? Was I emotionally compromised? Was I not disciplined enough? Was I chasing my losses? Or whatever reason it is. You can just continuously review your trade performance. And yeah, that's pretty much it. And then next month, this value will increase if you meet your April targets. So in May, my target is $480. I'm risking $16 per trade, and my dollar pip value increases because my bank value increased. So in May, my daily target is $24. That seems reasonable and easy to do. And if you're consistent and you meet your target, you can move to the next milestone. So it's pretty much like a video game, really. So if you meet your targets like Candy Crush, I beat that level. Now I can move on to the next level. Now I can increase my dollar per pip value. So you slowly increase your bankroll and then slowly increase your dollar per pip. Of course, you're going to have down days and down months. So therefore, you just don't go to the next level. You just keep on the same level and keep being consistent and keep working on yourself and keep improving. Keep reducing your net loss. Keep reducing this amount. So that, of course, you're going to have losses, but if you reduce that, that's pretty much an overhead for the business. That's a cost to the business, and that is your revenue. Revenue, cost, and then net profit is, and so forth. Just keep analyzing yourself, keep reviewing, keep learning, keep improving. It's not a quick rich scheme, definitely not. But I think that's what all these other big traders out there that say that, hey, you can't be rich with a small account. You're going to go bust before that. But I don't believe so. If you keep your emotions intact and you keep your trading plan going, your market entries and exits, your stop losses, they're all set, and you have an edge over the market, and you only risk 2% per trade, then I think it is possible to actually achieve to becoming a millionaire. I think that's about it for this trade discipline sheet that I use, and I hope if you want access to this spreadsheet, just please email me. I'm more than happy to share this information with you. My email is at forextrading3150@gmail.com, and it's also in the description. Also, if you have any questions, please don't hesitate to ask, and I'd be more than happy to answer them within 24 to 48 hours. Anyway, thanks for listening, guys, and that's pretty much it for this video. And please click subscribe, and hopefully I will be releasing more videos on what my trading strategies are. And yeah, please stay tuned, and I hope to hear from you soon.